Hello friends, good morning. Welcome to another video with SD. मैं हूं SD Shanando Dash, multi-asset trading and investment specialist. In this video, we are going to take a look at the global market equity indices and understand how things are changing because equity market is going through a lot of important changes. So it is important we keep a check on them. और ये चेंज चेक करने के लिए आप लोग जानते हैं आई एम गोइंग टू अप्लाई माय ओन सेटअप दैट इज एसडी रेनबो एसेट मास्टर व्हिच इज नथिंग बट एसडी रेनबो V1 or SD RSI X. And when I'm going to do that, I'm going to first take a look at the global stock market. And in this one, I'm going to apply, I'm going to do a bit different to show you. I can apply the index futures. While I take a look at the global market and in the daily chart, I'll select the index futures and in that I'll go down. I'll select the whole global market, S&P, Dow. Let's make this NASDAQ. Where is NASDAQ, NDX? After NASDAQ should come Europe. Let's make it Europe. Europe is Euro Stocks 50. Then let's make next the one Germany. Where is Germany? Yes, DAX. Then we have after Germany, let's make it Italy, FTSE MIB. After Italy, let's make it Spain, IBEX 35. After IBEX 35, let's make it London. We need UK 100. Then we need obviously latest round is China, Hong Kong. Then we have Singapore, and the last one would be Japan. So this would be a clear look at the global market. It has changed. So I can see weakness. New Spain is turning now weak. Spain has given very good run. We have seen Spain is turning weak. That's interesting. Now weakness is in Singapore and weakness is in Japan. So these two stock market are weak. The rest of the stock market seems to be doing fine. So instead of Singapore, we can add our also. Say Singapore ke jagah, let's put Nifty 500. Okay. And let me save it as a template. Save indicator template. Add international 2024. Save. So Nifty 500 is in the falling mode, the strength. This is the strength meter. Nifty 500 is more in the falling mode. I can make it bigger. Let's make the analytical table tiny and let's make the strength table large. So this is the strength table which I have created large. Now you can see Nifty 500, Nikkei, some of the Asian index and Spain in Europe seems to be turning weaker and basically seems like the latest round of sell-off more like a rotation, country rotation dikh raha hai, because new opportunities have come up. India se better opportunities come up in China. So let's look up. It has been declining for very long. People have been waiting to long China. Now China is coming back due to the stimulus. Maybe today, tomorrow, next week could be correction. But it has a massive move in Chinese index once we see that. So those could be creating a factor. So for now, what we'll do, we have taken a look at the strength table. So I'll switch off the strength table. Table off. And I will make this one large, our regular table, and start looking at different indices. First, I'm going to take a look at the global equity market, okay? So this is the situation in global equity market. Finally, it is undergoing a correction. In the daily chart, it is a bit delayed yesterday. It is yesterday's data. So it is undergoing a correction for the first time since the buy signal on 16th of September. And since it started coming back almost since 11th of September. First time a major exit, partial exit signal, not a full exit signal. So this is a first round of warning. And let's look at the emerging market. If we look at the emerging market, let me hide the original one. It's undergoing correction. First important correction, emerging market. India, we saw big move. Then we will look at European indices. Last, we'll look at America. European indices, we'll look at Eurostock 600, which is the biggest measure of European indices, European stocks, like S&P 500, Nifty 500, Eurostock 600. Undergoing correction. So Europe, a new breakout, it failed. A new break comeback of this range, it has clearly failed in Eurostock 600. Where the failure is coming, we'll look at Germany. Overall remains bullish, green. So Germany, after the initial range, it came back into strength. Germany is strong. Let's look at London, UK 100. London is weak. FTSE is not strong. FTSE is weak. FTSE or London will not like to remain invested. London Stock Exchange as a whole. Obviously, some stocks will be going up. That's a given anyway. This break failed. A strong comeback in France failed. That means longer term range possible. You saw the big move. If you bring down the candle, you'll see big move. Now, Spain was a very strong one. I exited almost at the top. I exited. It is only in the hindsight now it looks a top exit, but I exited largely because others were giving better opportunities now, and I had a good run. I discussed this, I think one of the class or videos could be. Now it is a definite exit. The momentum has gone by. It has showing weakness in the strength index as well. So Spain, after a good ride, it's time to close off the trades. If you have been in this still, I probably got lucky in this case that I could book at the top, but in this one reason was different, better opportunities. Italy with a yellow background will no longer be there. Europe, once again, after the initial thirst of some positiveness, I'm not getting it anymore. So it's a more range. What I initially discussed that is likely to be range. I got excited looking at some of the strength that we saw earlier in the previous week. And that excited me, but no, it finally, the Europe has gone back, given up. So Europe has given up. So broadly, now we'll go to Asia. Asia, where how things are in Asia. In Asia, I'm seeing Nifty 500 after a very, very strong, it has been one of the strongest indices over the world, definitely the strongest in Asia. But now the time has come yesterday, and also it has exit, short-term momentum bearish. Exit means this is the time if you're into stocks to do risk management and be very, very cautious until things come down. One thing you have to note, as the bull market gets mature and mature, the continuous bull runs get shorter and shorter. So with short-term momentum bearish, those who are with me, those who are learning from me, you know what to do, time to do cautious, you know what kind of risk management you have to do, all kinds of. What are those all kinds? Revise the class if you are missing it out. We have same thing, Sensex, no point looking at Sensex, it will show the same thing as Nifty 500. Vietnam index, on the other hand, this is now in this situation, we have to find where the strength is. Strength is in Vietnam. Wow, a lovely country. Anyway, I moved there. A beautiful country, loved it. Maybe I'll visit again in future, but Vietnam is strong. That's beautiful. Thankfully, we exited way, or I asked you to way long back in EWI, we were nowhere near South Korea. It is suffering a strong, painful decline. Not healthy. It is not good. Next, we are looking at New Zealand. It has been much battered compared to other indices. Not good. So it's not a full worldwide bull market. ऐसा बिल्कुल ही नहीं दिख रहा है. Lot of beginning bear market. Some are in bearish pressure. Some are moving into correction like Australia. No point remaining here with a background getting yellow. Too many exits are coming. Nikkei bounce back today, but looking at these candles, it is risky. It's still range bound. We can go for a buying once the white cross comes inside the candle body, which is outside a warning. China has been super strong, and that is largely because the stimuli announcement. Now I'm basically waiting to see where the China is going to give the correction. It has been a super strong move. So those who has missed the initial rally, a consolidation entry after consolidation would be a very good idea. This move has been based on Chinese government stimulus, central bank stimulus combined. So that's different. This is story. Hong Kong is similar story. Move, beautiful run. And that's the stimulus. Further rise, difficult to enter as this today is a correction. May more correction could go for a consolidation. Further break will give us opportunity to enter. So let's see, wait for some consolidation. Market will never go straight line up 20,000 to 30,000. So even if we enter 22,000 and it goes till 30, then still will make money. So more confirmed area hona, more safe entry hona is more important rather than jumping to do trades. Now let's Singapore. Singapore has been weak in our chart. This has been the weekly chart that we are seeing. If we look at the daily chart, it will be more visible. To show China, I wanted to show you the weekly chart. Now Singapore is weak, full exit. Indices we trade based on the daily chart. So with the background yellow, we remain fully zero towards Singapore. Now we are looking at last one is the American indices. S&P 500. I exited last night. S&P 500. I had long positions. And correction came. I partially exited my S&P 500. Here is, though I did not get an exit here, but looking at the overall risk, the way Nifty sell off, S&P exit was, I thought it was on the money. And that time we had a red cap, so I exited. And though I exited S&P, I remained bullish on individual stocks. And now this is Dow. One thing you should note that you should not trade based on my suggestions. I'm just doing this for educational purpose for the learners, not as a recommendation on what to do. Dow is showing comeback as I remain nil in S&P. Now I'm more open to take a new comeback risk. If Dow is coming back with short-term momentum, Dow could be one of my area. I'll see closely how it is behaving. We'll look at NASDAQ. So everywhere where the momentum, once the strong momentum I see, that will be an opportunity to re-enter into these positions. With momentum being faded, it is not a bad idea to see how it goes, especially when there are other long positions towards stock side. But still further rise is very, very much possible with NASDAQ. I basically want for now is a rise and at least an attempt to break 20,350. So overall dekha jaye, market has not turned mega bearish because currently we are in a recessionary cycle and now close to the second phase, that is market crash. However, we are not there yet. At this, I don't see that we are hitting that point where it's crashing down. But definitely the structural changes that we are seeing, that is important. What we are seeing in Asia, wherever weakness is there, we'll have to move away from there. I think S&P 500 stocks choice can be better right now than Nifty 500 given the risk reward. And secondly is we'll have to keep a regular check on the level of risk through the Risk Master, SD Rainbow Risk Master. Daily is the most important, and daily you can see several equity drawdown measure. Drawdown risk is on the rise. So when the drawdown risk is on the rise and lower time frame is hinting that there are possible, though lower time frame in this case has more calm down effect. It has more calm down compared to initially it was more flashing red. So the impact is more visible more on the daily chart, which is also the most important among daily, weekly, and 125. So some risk is there that S&P Dow, they can go for a down move. Down move means in correction, as corrections are clearly visible in part of Asia, mostly in Europe, and the stocks that are looking still strong is actually the US indices and China. These are the indices that looking much stronger, while other indices, other opportunities, including ours, are not so great. Nifty 500 short momentum bearish. There is no point being aggressive in the market. Though positions, you'll see many breakouts not working. You'll have to overall understand the overall market. See, overall market remains on the more bearish stance, is a more back foot. Those are the time not to be aggressive on stock. And also, it's also a time to see which are the stocks in these down pressure market which are still going up, like VMart. VMart is a stock that I have. I did not expect VMart to up 10%. I usually prefer to look at stocks in the later half. It has been awesome move. Great move. Very good. So anyway, sometimes are good. Not necessarily all trades go well. This VMart is good. Let me show you. But whenever a trade is not going well, this one I also could book some profit. That is HDFC Bank. You have to be on your toe and very quick. Unless you are very quick, you are going to suffer. Cut your risk. Be ruthless in cutting your risk. Never hesitate in cutting your risk. And never hurry in taking your profits. So overall, it looks great. A lot of stocks are going up. In my list, obviously, a lot of stocks are not doing well. Jahan bhi not doing well, lag raha hai, just cut it. Just like yesterday, I finally exited the. So this is not Mahindra Finance. I thought M&M. So I reduced significantly in the M&M and others there, which were not working out. Any trades, and agar if I think some trades can work out in future, in such case, I partially exit. Whenever risk reduction is must, if we can keep our risk or loss on the lower side, it will be very easy to get it on the good side. So overall, equity indices is a mixed picture. The warnings level are going up. We'll have to be careful. And India volatility risk is rising. So be more careful. So best wishes from my side to all of you, to all of your trading. All the best. And as always, happy trading.